What's going on, my good old friends of YouTube? It is your boy Stas here. Welcome back to yet again another video. And happy Friday, by the way. I hope you guys have had a great week in the stock market this week and life in general. Hope you guys are doing well. Cheers to everybody out there watching. So in this video, you guys know the drill. We're going to break down the markets. We're going to go over stocks. We're going to break down a bunch of charts. And we're going to go over earnings because all 7 of the companies, the stocks that we're going to break down in this video, all of these companies reported earnings. So we have a lot to talk about. If y'all find value, hit the like button. Feel free to subscribe. And don't forget to get your free money from Moomoo. What are you guys waiting for? Up to 16 stocks, each up to $2,000. Just use that link down below or go to StasSurFest.com/Moomoo. You'll see all the details there. Get your stocks, guys. It's a no-brainer in my opinion. Use that link down below. And with that being said, cheers. Let's dive into it. So it's about 10 a.m. right now on the East Coast, guys. So the markets just opened up on this beautiful Friday, and we're actually already taking out the lows from yesterday, at least on SPY, and all the indexes right now that I'm looking at it are in the red. So every index is taking out the lows from yesterday, right? We can see SPY here is down about 0.4%. We're trading at about 444 right now. Earlier in the day, and by earlier I mean about 20 minutes ago, we hit 443.35, which put us under the lows from yesterday, being about 440, 450, roughly right around there. So we took out the lows from yesterday and from the last couple of days here on SPY, which you can see on the 5-day chart and on the 10-day 30-minute. We're in this downwards channel. Same thing here on Triple Q, if I'm not mistaken. Yeah, I mean, look, guys, it's in the channel as well, downwards channel. It also took out the lows from yesterday, and now it's trading at a fresh low on the 10-day 30-minute chart, just like SPY. So what does that tell me, guys? Well, it tells me that the bears are still in charge, at least in the very short term. You guys can see on this 30-minute and on the 20-minute, the bears are still clearly in charge, and that's been the case, believe it or not, guys. I know it might not seem like this long, but markets have been selling off and in this downwards channel for almost a month now. You guys can see we peaked at about 388 on Triple Q. That was on the 19th of July, and today's the 11th of August when I'm making this video, so we are technically down for the past 3 weeks. We've been trading in this channel, right? Same thing with SPY. You know, this thing peaked out at about let's see here. Actually, no, this thing has it peaking at 460, but that was a glitch. Either way, this peaked about 3 weeks ago as well, and it's been trading in this downwards channel as well. And right now, all the indexes at the time that I'm making this video are in the red. So enough with the indexes, guys. Let's talk about these companies, these stocks that reported earnings this week, because they're very important, and you guys must watch them. I'm watching them as well, obviously, and we'll talk about which ones I own, which ones I don't own. So the first one that I want to break down, which I have not covered this week yet, is Disney, ticker symbol DIS, which right now is at $90 per share. It's down 1.7% on the day, but they reported earnings, I believe, on Wednesday, and yesterday the stock was up around 5% at its peak. So yesterday it was actually doing quite well, and now as the overall market, everything is selling off, Disney's giving back a little bit of the gains as well, but it is still breaking out of this triangle that you guys see right here, the descending triangle, which is actually a bearish pattern. We're breaking out of that, which is great. We're above the moving averages, and now we're about to get a death cross potentially, as now we're breaking above the highs from the beginning of this month and from the middle of last month, being about 91 bucks. So let's talk a little bit about these numbers, guys. Bear with me. So you guys can see Disney ended up doing EPS of $1.03 per share, which you can see right here at the top, which beat the 95 cents expected, which is good, and they missed on revenue. So mixed bag earnings out of Disney, guys. They beat EPS, but they missed on revenue, $22.33 billion versus $22.5 billion expected. And Disney Plus total subscriptions came in under the estimates, 146.1 million, which is still a ridiculous amount of subscriptions, right? But that's under the 151.1 million expected. That's according to Street Account. And you guys can see right here, Disney recorded $2.65 billion in one-time charges and impairments, dragging the company to a rare quarterly net loss. And the majority of those charges were what Disney called quote, content impairments related to pulling content off its streaming platforms and ending third-party licensing agreements. I'm not exactly sure what content they're pulling off of the platforms, but that is why they ended up seeing a rare quarterly net loss. And on an adjusted basis, guys, they had $1.03 per share profit, and net income came in at, let's see, last year it was $1.41 billion. This year it swung to a loss of $460 million. So that's a quick breakdown here on Disney, guys. And again, keep your eyes on this breakout. And full disclosure, I'm long Disney. This is a stock that I've been buying for quite some time now, for a couple of months, as it has been trading in the mid 80s, low 90s, mid 90s. That's where I've been buying, and this is one of the stocks that I've been buying in the Patreon portfolio, which is a private portfolio that I've been building exclusively for my Patreon members and those that join the YouTube channel membership. So if you guys are interested, check out the links down below. Join. You guys won't regret it. I appreciate you all as always. And now let's talk about some other names here. Alibaba, which of course you guys know is a Chinese company. This company reported numbers yesterday morning, and their stock did pretty well, although right now it looks like it is kind of toppy around $100, $102, right around here. That's where we failed yesterday and from back in the beginning of this month of August. So Alibaba ended up doing, let me see here, guys. Let's scroll down a little bit. They ended up doing, let's see here, guys. Bear with me. Adjusted EPS of 240, which beat the 202. That's great. And they beat on sales, $32.29 billion versus $31.2 billion expected. So double beat for Alibaba. And this is one that it seems like right now is double topping at about 100, 102. But if it's able to break out of that point, guys, we could be taken off. And mind you, 105, 102 to 105, that was also resistance back in March, right? Early April. So if we break 105, guys, 115.20, that's where it could be going in the short term. And I'm also long Alibaba. I've been long for quite some time. I haven't bought the stock in a long time, guys. I've just been holding on to it as I was buying it in the low hundreds, under 100, mid hundreds. I mean, I have lots all across the board here on Alibaba, under $150, right? And this is one that I was buying a while ago, and again, I'm still holding on to it, and I'm happy with the earnings, and I'm happy the way China's economy is slowly starting to turn around. It's still not looking that great, let's be honest. It's actually looking pretty bad, but I think Baba's revenue growth was 14% year over year. Not bad, not bad. We'll see how it does end up playing out moving forward. Wynn Resorts, another one, WYNN. Full disclosure, I do not own Wynn Resorts, but they do look interesting here. Actually, not really. I thought they did look interesting yesterday when they were about to break out, but now they're dumping. The stock's down 4%, back under $100. It looks like it's still trading in this channel, downwards channel. So let's see what they ended up doing, guys. It looks like Wynn ended up doing 91 cents adjusted EPS, which crushed the 59 cents expected, and they ended up beating on sales as well, 1.6 billion versus 1.54 billion expected. So double beat for Wynn Resorts. Not bad. Anything here on guidance? No, but it looks like Stifel adjusted their price target to $150 from $137, and they're keeping a buy rating, which I guess is good for them. Does that mean I'm going to go and buy the stock? No, but that is a good sign for I guess, I mean, if there's bullish analysts out there, that's good for the stock, I guess, in the short term. And right now, it's still trading in this channel. Like I said, I'd like to see it break above 110. Will it do that anytime soon? I don't know, but I'll set my alert there, and we'll see what happens moving forward. So the trade desk, TTD, which is another one that I'm looking at here. I don't own it right now, but I am watching it because it is pretty oversold now. We're down about 2% on the day. We're at $75 per share, and earlier, about a week, 2 weeks ago, it was at $91. We're down 18% from that point, which is a fairly big drop. So TTD ended up reporting, let me see here, 28 cents EPS, which beat the 26 cents expected, and they beat on sales as well, 464 million versus 455 million expected. So not bad, guys. Actually pretty good. They beat EPS and revenue. And when it comes to guidance, Q3 2023 revenue guidance is roughly $485 million versus the $479 million expected, which is is good. It looks like Citigroup adjusted their price target to 96 from 86. They're keeping a buy rating. It looks like Oppenheimer adjusted their price target as well. They're maintaining outperform rating. Evercore ISI increased their price target. Outperform rating, their price target's $100. So it looks like a lot of analysts here, firms, whatever you want to call them, they're still very bullish, and the stock's pulling back on that bullishness and pretty good earnings guidance. So this could really be an opportunity, down 18-20% on the cusp of a bear market. I'm keeping an eye on TTD on this dip. I might have to pick it up, guys. I might have to pick it up. And again, I've not done it yet. I'm not telling you guys to go buy it, but I'm watching it very, very closely. And the next one is Sony, S-O-N-Y, which I don't own right now, but I'm keeping an eye on as well, as they're pretty beaten down, just like TTD. This stock is down 16 to 17% from highs after doing pretty well on earnings. $1.21 EPS versus the 96 cents expected. That beat, and they beat on revenue, $20.5 billion versus $18.11 billion. What a beat. And it looks like here sales surged 33%, driven by strong PS5 performance. Yup, that makes sense. The PS5 is crushing it. So very strong earnings out of Sony. The stock is flattening out a little bit. Could it go lower? Sure, it definitely could. But I don't think it will in the short term. I feel like we could be bottoming out here in the mid-low 80s, and we could be getting ready for maybe another push. I don't know. Time will tell, guys, but that's a quick breakdown on Sony. Plug Power is another one that I'm looking at. PLUG is the ticker, which this one's getting destroyed. It's down 5%, 4% roughly on the day. It's awfully close to the recent lows being about 740, so it's not looking great technically, and it was breaking out, no joke, a couple of, about 10 days ago. It was at $14, so it's not looking good at all for Plug Power. It looks like they ended up doing negative 40 cents EPS, which missed the negative 26 cents, so they lost more money than expected. That's not good, but they beat on sales, $260 million versus $242 million. That's not bad, pretty good. And they reaffirmed their 2023 revenue guidance, and it looks like here some firms are maintaining perform rating. Looks like they lowered their price target, BMO Capital, which is not good. So yeah, that could be contributing to the dump off here. So I'm not a big fan of Plug Power here, but I figured let me cover it because the company reported earnings this week. And the last one, which I used to be a big fan of as a kid, and I haven't gone in years, but maybe I'll go at some point in the future. I don't know. It is Six Flags, guys. You guys know Six Flags, right? They have an awesome location here in New Jersey where I'm at by Jackson. That's not too far from where I'm at. I used to go there a lot growing up. They have a crazy roller coaster. You guys have probably ridden it, maybe not. Let me know in the comments, but it's called King de Ka. I remember vividly as an 8th grader, in a little side tangent here, a little side story. I was with my buddies. We had, I think it was like a class trip or whatever, goofing off, the whole bus ride. You guys know how that goes. We get to Six Flags, and some freaking how, some way, we were first in line for the park once when it was opening, or right when it was opening. And when I tell you, we sprinted to King de Ka. We sprinted to King de Ka, and we got on that ride first in freaking line, and I think we got front row if I'm not mistaken. Man, let me tell you, good times. But that ride is unbelievable. Go on YouTube right now and type in, or maybe after this video, type in King, K-I-N-G, D-A, Ka. I think it's K-A or C-A, whatever the heck it is. Go watch that roller coaster ride, guys. It is insane. Would I do it now? Heck no, I wouldn't go back on it, but I've ridden it a couple of times as a younger guy, as a kid, and it was a blast, man. And their stock price is not looking so great. It's kind of looking like the downside of a roller coaster, right? The stock's been getting destroyed. It was at $31 back in March. Now it's at $21. Pretty big dump for Six Flags. The company reported earnings earlier this week, and let me see what they did, guys. And you'd think, they're doing pretty well in the spring into summer quarter. Maybe we'll see next quarter might be better, but it looks like here they did adjusted EPS of 72 cents, which missed the 78 cents expected, and they missed on sales. Oof, guys, 443 million versus 459 million expected. So double miss for Six Flags, it looks like, which is not good. And it looks like a lot of these analysts have a sell rating, neutral rating. They cut their price target. Morgan Stanley did. So not the best sign. And it's right by the lows here at 21 bucks from a couple of months ago. So technically, it looks like it could break down. And now it's looking pretty bad on the 3-year chart as well. Maybe there could be some value here. I don't know. I mean, there's got to be something wrong going on with this company. I haven't looked at it fundamentally in a long time, but there's got to be a reason why it's down so much on the year. There's got to be a reason, and I might have to do some digging. So what do you guys think? Let me know your thoughts in the comments. Feel free to hit that like button. Feel free to subscribe. We're about 100 subscribers away from 30,000 subs, which is the goal here in the short term. Then we're going for 50, then for 100. So make sure you guys subscribe. And don't forget to get up to 16 stocks from Moomoo, the sponsor of today's video. All you guys have to do is go down below, open up your account, and fund it with at least $100. You get 5 stocks right off the bat, and fund it with at least $1,000. You get 10 more stocks, totaling 15 stocks each, up to $2,000, guys. And listen to this, the best part of the promo: once you fund your account with at least $5,000 on top of those 15 stocks, you also get, for a limited time, a free share of either Tesla stock or Expedia stock, which makes this a no-brainer. So get on it, use that link down below, and feel free to check out my Patreon if you guys want to be a part of the Discord chat. You want to see me build out my private portfolio. You want to be a part of just the community in general, right? More in depth. That's on Patreon down below. And with that being said, guys, cheers. I'll see you later.